The Opportunity Zone is quite interesting. It's sparked a lot of interest from real estate developers more than investors. It's somewhat complicated for a strict investor. You really have to be willing to do development. How many opportunity zones are there around the country?
There are 8,766 opportunity zones spread out across every state, 6 U.S. territories, and Washington, D.C.
And when you architected the program, how did you pick the opportunity zones? I mean, first of all, that's quite a few of them, and they're little pockets, aren't they? For example, give us a sense of geography and size. What are the largest opportunity zones by, I don't know, square miles, I guess, and then the smallest?
So opportunity zones are made up of census tracts. So the size of opportunity zones are within a pretty narrow range by population. So they're typically between 2 and 8,000 people. And in urban areas, that can be very small. That can be a 1 square block or 2 square blocks or more. But in rural areas, that could be hundreds of miles. So it all depends on what kind of geography you live in the U.S. To sort of get back to the first part of your question, though, lucky for me, I didn't have to pick the zones. The way the legislation was set up was that the federal government set a baseline economic standard, something it calls low-income communities, which are places that are both at 80% of median income of that state or area and have at least a 20% poverty rate. And then it was left up to the governors to pick among those places 25% of those communities as opportunity zones. And the net of that is that opportunity zones now cover about 11% of the country.
Fantastic. What constitutes, I guess, a good opportunity for a real estate developer in one of these zones? I mean, with 8,000 plus zones, how does a real estate developer pick and figure out where to invest?
First of all, I'd say the program is much broader than just real estate. This is a program that you can make investments into any kind of asset class that
Businesses
can essentially,
too, right?
that can essentially take private equity capital. And you're seeing that around the country as well. Now, real estate, of course, is the most active asset class because it, by definition, is geographically or place-based, and because there's a long history of using tax incentives to invest in real estate. The most active part of real estate you've seen in the marketplace has been multifamily, basically investing in apartment buildings around the country. They make up just over half of commercial real estate investments, according to CBRE. But you're also seeing investments in industrial buildings and manufacturing facilities, and of course in offices. And increasingly, you're seeing this in the business side as well. So we're seeing companies that are using opportunity zones to build and finance entertainment companies and film studios, to build renewable energy and telecom infrastructure, and to support franchises and other business models that are sort of organically rooted to place.
And how is the program working out so far? We're in the pretty early stages. I guess maybe the predecessor to that question should be, when did it begin? But then give us an update, if you will.
There are several different, start dates you could refer to. I mean, functionally speaking, we're really still within the first year of the program. Officially, the program was passed into law at the very end of 2017 as part of the largely Republican-passed tax reform. Although opportunity zones, its origins are in bipartisan legislation, about half supported by Democrats and Republicans. Governors then selected the actual census tracts in their states that would become opportunity zones in June of 2018, of last year. But the Treasury Department didn't write the rules of opportunity zones until really April of this year. They released 2 tranches of regulations last October and this April that make up about 250 pages of regulations. And it was really as of April of this year that you saw the market take off. So we're really just about 6 months into the program. And by the end of this year, I think you'll see a lot more activity. In fact, we've seen quite a bit of activity already. There's some early data that show there are roughly 300 opportunity zone funds in the market that are targeting about $65 billion of capital. And they've raised on average, about 15% of that target. So this program is responsible for roughly in the realm of about $10 billion of equity investment across the country.
Okay, so I mean, those numbers they sound big, but in terms of the overall real estate game, they're actually pretty small, right? Do you have a projection or a thought in terms of how big this will grow, how much capital will flow into opportunity zones ultimately?
Yes, but let me give you just a sense of context for that $10
Yeah,
billion
right,
number.
right. Yeah, please do. That's always the question, you know. People throw these numbers around and they sound big, but the question is always compared to what, right?
Yeah,
You know?
well, so
Yeah,
opportunity zones come out of a long history in this country of doing place-based incentives. And
sure.
historically, these programs have been quite small. The largest program in this space, and the most recent one, which was now about 20 years old, is called the New Markets Tax Credit. And that program is responsible for about $3.5 billion a year in equity going into these communities. So in the first year of this brand new program, you've seen three times as much equity been deployed already. And frankly, that's an incomplete number. That's just one accounting firm's ability to track funds. Much of the opportunity zone investment in this country is being done through single deals, both business and real estate deals around the country. So that number is probably much larger. So I gave you what I think is a very conservative number. I think this
Mhm.
program will realistically be in the range of $50 billion a year when it's fully up and running in the next couple years or so. And again, to give you a sense of scale of that, that's about the size of the entire venture capital industry.